So there's a big question in my head right now, and the question is this: does fundamental analysis work side by side with trendline? Because trendline is a very tight something that has to do with technical analysis deeply, while fundamental, which is understanding the macroeconomics of the asset you're dealing with, is something that is a bit different. That is the major topic of this discussion today, this video today basically, and let's take a good look at this. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang. So before I start, I would like to ask again, for those of you who are new to this channel, do well to hit the subscribe button down below, and also do well to hit the like and share this video to someone who you think might find it very entertaining or educational to them. But the debate here is, does fundamental analysis go well with trendline trading? Like, can you use trendline trading as a technical strategy to follow the market when you use fundamental bias? That is the question in its basic form. Now, before I go ahead to give my own opinion, I'd like to hear what you guys have in the comment section. Do well to go down there, tell me what you think about that situation. For those of you who really have a lot to say, or you could just make the whole statement, ask ChatGPT to summarize it, and then put that summary in the comment section. But regardless, do not be insultive, do not be crazy or abusive, just be mature and drop your opinion down there. But as you come back up, do well to also hit the subscribe button, and let's continue. Let's take a good look at this situation right now. The fundamental situation right now is that everything against the Swiss franc is bullish. This is the situation of the market based on all news release up till as we speak, right? And then if I just take out for everything that has a Swiss franc, right? You see, those are the only things that has either bullish or bearish signals. The rest of them are more neutral. Let me show you what I mean. It does not contain CHF. Let's say it doesn't contain CHF. You're going to see there's no other currency pair that has an overall situation of bullish or bearish if it's not the Swiss franc, right? This is the current situation of, now this is with every single news release. But when we look at the last 14 days, the set of news release in the last 14 days, there we can see the changes. But then again, the Swiss franc remains the constant reiterating currency pair or currency that affects the market madly. So in this case, let's take away the Swiss franc. I want us to do a practical approach of this situation. We're going to remove the Swiss franc from the situation. Let's look at every other thing that is not Swiss franc, and then remove everything that's also neutral. Now, these are the pairs that are absolutely not Swiss franc, because the Swiss franc, their information is quite tricky and has a good one directional movement right now. And these are the ones. So we have this is about how many pairs? 7 pairs. So let's take a look at this thing on the chart and then ask ourselves. We're going to start with the major. The very first major here is the Australian dollar, US dollar, right? Let's head for the AUDUSD. So this is the Australian dollar against the US dollar chart right now. This is the monthly chart. Let's drop down to something that has to do with fundamental news is released every day. So it's a daily situation, right? And in the daily situation, what we saw was that it's supposed to be bearish, right? It's supposed to be going bearish. And right there on the chart, you can notice in the recent 3 days, it's been actually going bearish. So if you're trading a trend line with this, I think it's going to work. You can see right here, this is a 4 hours trend line. It's also a daily trend line because it's just a tighter daily trend line, but on the 4 hours it looks more steep. This was a 1 hour trend line that has been broken. I could remove this. So trend line with fundamental analysis, you could look at it on the 4 hours and say, okay, let's go with the 4 hour situation. So on the 4 hours, I expect a bearish market. The only thing here is it seems like it's giving, you are expecting a particular bias. Trend line, normally you do not expect any bias. You just trade whatever the price is printed. In this case, you have a bias already set up by looking at the fundamental situation of the market. So Australian US dollar, I think this actually got a pass mark in my opinion. Let's look for a symbol. So I think the problem with symbols is you cannot actually favorite them. So let me put this right here. So this got the pass mark. This market is printing in similar direction. You could have traded the 1 hour time frame with it, you could have traded the 1 hour time frame and you'd still be safe. You'll still be safe on this trade because you'll be following the market situation. Now let's check out the next one on the table. The next major we have here is the New Zealand dollar against the US dollar, and that is the saying it is slightly bearish. Now take note, we're looking at the last 14 days situation, right? The news of the last 14 days. You may start seeing the changes in recent days or days before the 14 days, right? So you're looking at in the last 14 days, I will beginning to see bearish movements within the last 14 daily candles. Now let's go to the New Zealand against US dollar, and oh, we have similar situation here. And right now we're just breaking behind a 4-hour chart. Same thing, as you could put this from here all the way to this point. This is your 1 hour, and you would have cut this trade a long time ago. Maybe you might even be in profit right now. That would have been less risky. So basically, it's what I'm saying here. You can actually trade fundamental analysis bias following trend line, and it is a good thing, right? Because I didn't even know this before, right? I'm just doing this right now on this video without edits. Let's go with the US dollar card. Now this is 2 times, right? We've seen two situations where it did work well for us, right? Now the US dollar against the card, which is supposed to be bullish in this case. Oh, I actually had a trade here yesterday and I stepped out of the trade because I said I didn't want to be keeping my trades all night. Now the action line to the downside got broken, or similar time broken, and price has been moving upwards with that. In the 4 hours, you can see that price movement, and in the 1 hour, see that price movement. Now I can't come into this trade again as of now because stepped out of this trade. I can't come into this trade because me coming into this trade right now will be me taking more risk. So I'll be putting my stop here, trading all the way. And take note, this take profit is not functional because I do not use a take profit. I actually close trades. I don't use take profits. So this is what I'll be doing, and that's like way risky. You can see the risk I had at first and compare it to the risk I'm going to be doing right now. It's a lot more. So I can't actually come into this market. And what this means is we have about three fundamental situation falls perfectly in line with the trend line analysis. So we don't have to waste so much time. What does this mean? It means if you're trading trend line, if you're trading market structure, if you're trading anything whatsoever, whatever you're using, I've always taught you guys market structure on this channel, and you've seen me talk about it plenty of times. In my opinion, let me just increase a little bit so you see me more. Yeah, so my little time in the market and trying to understand the forex markets and trading as a whole, I've come to realize price always prints what the fundamental analysis is saying at a given point in time. It may be immediately, it may be some time later, but because this is the way it works, let me show you something here. I'll squeeze myself back a little bit. Yeah, that'll go about 1,000 or 100 pips or so. All right, so something you need to understand is this. This was the last set of news that was released called the previous, right? And then we have the forecast. Now the forecast is everybody's expectation of what this news should be. That is something you should understand. Now, as traders, we trade if our expectation is met, not based on just the previous. We've already accounted for the previous to determine an expectation, which is a forecast. So if that is met, we trade based on that. If it is not met, we trade based on that. So if it is not met, it is bad. If it is met, it is good. So with that knowledge in mind, it means people are not trading because of what happened before. People are trading because of what they expect to see. It means every news you are seeing in the market is the reason why price is going to move in a certain direction based on our expectation, not based on the previous anymore, because we've accounted for the previous. In that case, I like to tell you, think of it in that manner, right? So if we're always trading ahead of what we are seeing as the current situation, that means take a good look at it. Let's go something that has not come out. So for core retail and retail for Canada, people are not trading because it is 1.9% and 1.5% anymore. Take note. People are trading because they are expecting a negative 4% and a negative 0.8% information today at 1:30 Nigerian time. Right, this is Lagos time, GMT +1. People are expecting this negation, and hence people are trading based on that expectation already. So the market is already leaning. If you go to the chart, you'll see that price is already leaning towards that direction. when it comes to Canadian dollar against other currencies, especially if the currencies they are betting it against are like very currencies. So in that case, people are already trading in that direction. Now, if the news comes out good, like in the direction we wanted it to go and even more, that is for in this case retail sales. Let's take a good look at what retail sales is. Retail sales is that people, consumers spending money. Now, retail sales measures the change in the total value of inflation adjusted sales at retail level, meaning sales things have met inflation, right? Things are being sold at inflationary prices. The actual price that it's supposed to be sold based on inflation changes, and then people are still buying it. It means people can afford to buy the inflation situation. Now, it says a higher than expected reading should be taken as a positive reading. Now, this is something that is supposed to be higher than expected as good, meaning already everybody already thinking the Canadian situation is bad because we're expecting negative compared to before. Now, if what comes out is not up to what we expect in this particular situation, it means the Canadian dollar is now going to gain some strength. In our perspective as traders, not as if it really gains strength, but in our perspective as traders, it gains strength because, now take note, because we expected it to go so down, but it didn't get down, like get that bad. So we'll have to now start, let's buy it. It's not as bad as we thought. If it goes far beyond this, meaning it goes, let's say, negative 1.2, negative 1, negative 4, it is so bad that the little we have, we want to even sell it off. You get? So the market is already expecting, meaning whatever you're seeing here, when you start to go below the daily time frame, is people's expectation already manifesting. That is what it is. So with this, I hope you learned something new today, and it's a short video. I'm in the office already. You can see I'm fully dressed. This is my office room, my cubicle. Peace. Have a nice day. See you guys on the next video.